Welcome to the McKeever Show, episode number 2. And so in today's episode, we're going to discuss, is investing in investment properties a good idea? Do rent prices ever go down? How can you actually move to Canada, assuming you want to? As well, I'm going to discuss with you 4 reasons why socialism fails. We're going to share a couple Reddit posts. One of them is going to be discussing whether financial incompatibility is good enough, and if it's the only reason, should you break up with that partner, as well as looking at a $20,000 to $25,000 engagement ring. And at the end of the show, I'll share with you my favorite podcast this week that I was binging. So this is episode number 2 of the McKeever Show. I'm really excited by it. I appreciate all the support I got on episode number 1. One thing I did forget to mention, if you're on the YouTubes often, you're probably familiar with Philip DeFranco Show. This is essentially my version of that. It's just going to be me talking about the articles, the random information I stumble upon, and the stories I want to share with you guys that it doesn't necessarily make sense for me to make a separate YouTube video on, but I kind of want to foster more of a community, more of a discussion. So this is all about me sharing my thoughts, my opinions on these stories, and then ideally getting your feedback and your comments on it as well. Remember, jump in those comment section, guys. Smash the like button if you're enjoying this video, and hit the subscribe button if you're new to this channel. But the first article I want to share with you is from Reddit, and it's a Personal Finance Canada post. So this Reddit post here is titled, "What is it with people wanting to buy income properties?" I was listening to the radio this morning, and they were talking about some $50 million lottery that was going on. The hosts both agreed that they would spend almost all their winnings on real estate income properties. Why would they do that? Wouldn't they be making more in an index fund or other passive stock? Am I missing something? I only know 2 friends that were landlords. They owned maximum of 4 properties, but made no income while paying the mortgage. And once it was paid off, a simple major repair or vacancy wiped out their income. And so this is something a lot of us real estate investors hear consistently. Someone's aunt or uncle or best friend once removed, turns out they became an accidental landlord and had a terrible experience and didn't make money. And the comment sections here from the Personal Finance Canada subreddit, there's a lot of negativity towards investment properties, a lot of people sharing anecdotal stories about how they never made income in real estate. There's 2 sides to every coin. To me, investing in investment properties, making the commitment to investing in real estate, it is a business. It's something you need to take serious. It's not something you can just set and forget. If you approach it with the wrong perspective, I think that investing in real estate can be a terrible experience. If you approach it with the right perspective and the right criteria, I think it can be a really financially rewarding strategy. And obviously, I bump into people that are succeeding with real estate investing all the time through my networking, whether it be at all the amazing networking events we do here in London, Ontario, or networking events in Windsor, Toronto, Kitchener-Waterloo, Cambridge, Hamilton, all those great cities in Ontario, Canada. People make money investing in real estate. If you don't believe that anyone's making money in real estate, I think you're kidding yourself. There's opportunities in any market, in any field. So like whether it's equity investing, debt investing, real estate investing, hard commodity investing, or hard currency investing, people can make money essentially doing almost anything with the right model. But the real reason we're talking about this is I did a YouTube live video last night, and Kevin Greger left a comment that, it's a comment I'm getting more and more frequently these days, people being very bearish on my channel towards real estate investing. So I'm just going to read the comment from Kevin Greger. "Talk about the coming correction and how prices will drop. Equity dries up, holding on while rents drop and investors lose their shirt." So first things first, when I usually get these sort of comments, it always feels like it's framed from an emotional perspective. I'm not saying Kevin's is. In fact, I would say Kevin's is very balanced compared to the average comment I get telling me about an impending real estate correction or an impending market crash. I thought, I'm getting these comments way too often, let's just address this. So whenever people come up or bring up the subject matter with me about a real estate correction, my number 1 defense is, I'm investing for cash flow. So unless the rents dramatically decrease, my business model is not going to be impacted. Sure, would I like to have more equity or more appreciation on my properties? Absolutely, who wouldn't? However, in the day-to-day management of it, because I'm investing for cash flow, because I'm investing in properties that sustain themselves or do better than sustain themselves, a temporary price correction, a temporary blip in the market prices isn't going to impact me or my business model. That's kind of my sleep at night factor. However, Kevin's one of the few people to bring up the concept of rent prices dropping. And a few people jumped in the comment section, including John from Windsor and G Greedy. And so they both bring up the fact that rent prices don't drop that often. I'm just a dude on the internet talking to you, so let's actually get into some facts. So jumping over to CMHC's Toronto Historical Average Rents by Bedroom Type. Now this was one of the best resources I could find. I'll have a link in the video description down below so you guys can check out all the sources to all the stuff I talk about in this video. However, I think this one is in particular very interesting and very important. So quickly kind of skimming these charts, to me, it seems like since 1990 up until 2017, rent prices have kind of steadily increased. But I thought, this is just me skimming it, so let's quickly make a spreadsheet. So jumping over that spreadsheet, you can see I literally just copy and pasted it. So we got the rents for bachelors, 1 bids, 2 bids, 3 bids, and kind of the average. We can see that it's pretty much a consistent climb. You know, there's times when rents seem to, you know, just tread water, but I'm not really seeing any time that the price is corrected. In fact, the only time that it appears would be around early 2000 for 3-bedroom apartments. Those are the only ones that even saw a mild decrease. And again, it looks like we're going from say $12.57 to $12.23. So, you know, you're talking about a $20, a $30 price correction. Not dramatic, not significant, not going to devastate a landlord, or at least I wouldn't expect it to devastate a landlord that's investing for cash flow. I don't see the likelihood of rents decreasing. However, I couldn't find a lot of great Canadian facts, so let's jump over to this other one on showing how rent prices have changed in America. So this is going back since 1960. And so again, this is looking at the real median rent index to 1960, as well as the real household income index to 1960. So starting in 1960, essentially what they're doing here is assuming that prices in 1960 were 100% and then adjusting for inflation, because that's a real thing. We can see here, rent prices seem to just steadily increase. Again, we can see times where they kind of level off and they don't dramatically increase. It doesn't seem to be any time that it's dramatically decreased. There doesn't appear to be a time where like it's even decreased by 10%. So it seems like a pretty smooth progression, then it kind of plateaus for different periods of time, smooth progression, then plateaus again. You know, if you're looking at this right now, judging at those periods of times when things plateaued, it looks like it often plateaus for about a decade, and it's starting to plateau now, and maybe we're about a quarter or halfway through that plateau. Maybe it's possible that US rent prices or household median rents won't dramatically change for the next few years, but again, that means they're not going to dramatically change for the worse or the better. So it still seems like if you invested appropriately during the buy phase of your investing, that you should be fine. And in fact, the really interesting fact is we can see the real household income index in 1960. And so since 2000, real household income's been decreasing. However, rent prices continue to increase, even, you know, being indexed to that 1960 price. Even let's say that the purchasing power slowly erodes from the population, from the middle class, if you will, because we constantly hear about this attack on the middle class, about how the middle class is disappearing. It seems like even if the middle class does slowly disappear, rent prices, it doesn't seem like they're really going to go anywhere. So that's my thoughts on rent prices. I don't think that there's a significant risk of rent prices dramatically decreasing. Again, now a plateau for 5 years or a decade, that does seem possible to me. However, decreases of any dramatic nature, it doesn't seem reasonable based on the data that I've seen. If you disagree with me and you got your own data, you got your own facts, share them with me in the comment section down below, because I do want this show to be a two-way conversation, guys. So give me your opinion, share your facts with me, because I'm open to change. Facts are facts. One question I get a ton of on my YouTube channel that I never really expected I would get is people wanting to know how to move to Canada. However, I did stumble upon a Mr. Money Mustache forum post discussing how to move to Canada. And while I can't back up the validity of any of this information, there's a great discussion on the subject matter that I'd recommend you guys hop over and check out if you're interested in moving to Canada, because there's a lot of helpful people on Mr. My Mustache, and they know way, way more about the immigration process than I do, because if you ask me, I'm pretty much just going to tell you to go to like canada.ca, and hopefully there's information there that can help you. However, if you guys have any resources on moving to Canada that you'd be willing to share with my audience, I would greatly appreciate it. I know they greatly appreciate it, so share it in the comment section down below. Let's get a little bit more controversial though. I want to share with you another Mises.org article, this one written by Anthony Mueller, and it's got the inflammatory title of 4 Reasons Why Socialism Fails. The 4 reasons he shares with us that socialism fails is, first, socialism eradicates private property and markets and thus eliminates rational calculation. Second, socialism allows soft budgets, so there is no mechanism in place to discard inefficient production methods. Third, abolishing private property and replacing it with the state distorts the incentives. 4, the socialist system, with its absence of private property and of free markets, inhibits the economic coordination of the system of division of labor and capital. You probably either were just nodding your head, yes, 100% agree, or you're being inflamed by it, or you have no idea what we're just discussing. So there'll be a link to this article in the video description down below. Hop over to learn more about it. But the one I just really wanted to highlight that I thought I could even tie into last week's episode is the second point. Socialism allows soft budgets, so there is no mechanism in place to discard inefficient production methods. And I found myself discussing this the other day with someone about the Joe Rogan podcast, the interview he did with Elon Musk. And we're discussing just the radical nature and approach Elon takes to problem solving. So he essentially starts with a blank slate. So the way I would kind of compare it, or the way I would use in discussing this reason why socialism fails, is soft budgets. So essentially the way a lot of budgets are done is based off of historical data. Whereas there's other concepts for budgeting, like zero-based budgeting. And so zero-based budgeting is you kind of start all over and have to re-justify everything. So just because you spent, $10,000 last year on paper and ink is no reason why you should spend it this year. So you need to go and justify your cost every single time. And to me, that's just another way to kind of showcase Elon's first principles. So when he's trying to solve a problem, he starts really at ground zero and starts trying to figure out the most effective and efficient model. Whereas the problem we often see with socialism or government intervention is it creates these systems, and I like to call them kind of fiefdoms, that different bureaucrats get in charge of, and it becomes really hard for them to want to give up any power, any of their fiefdom. So we end up basing all our budgeting off of historical budgets, which means it becomes really hard to discard those inefficient production methods, as Anthony pointed out in this article. Again, link to this article in the video description down below. I highly recommend you guys get familiar with Mises.org if you aren't already, because I've been reading posts on there for probably almost like a decade now, and it's definitely just helped make me become a more informed citizen, a more informed person politically, and I'd love to see you guys get value from this website too. What other political websites, what other maybe libertarian or non-libertarian websites do you guys check out? Let me know in the comment section down below, because I'm always looking for more resources and more great sources for awesome articles to bring to you guys. Another Reddit post I want to share with you guys just real quick is this idea of job hopping. And so the idea here is that the only way you ever get a real vacation, or a vacation of any real length, is by switching jobs. So, you quit your job, take on a new job, but you maybe leave 3 weeks, 6 weeks, 8 weeks in between when you start that new job, so that you can actually go on those bigger vacations that are really difficult to do when you only have, say, 3 weeks of vacation a year. It was just kind of interesting because I can remember me and my friends discussing that some of our happiest times were in between job hopping. And I think it's still something that far too few of us are willing to embrace. The reason that so many people end up being underpaid, not being compensated to their full potential, is because they stay at the same organization and they don't job hop. One of the fastest ways to increase your compensation is by job hopping. This idea of company loyalty is becoming more and more archaic, in my opinion, as society progresses. There's rare examples or rare anecdotal proofs that you can bring up of great company cultures, but in general, I think you're much better served by looking out for number one, and job hopping is a great way to get that mini retirement experience without even having to tip your hand to your employer that you're thinking about the idea of mini retirement. Because for whatever reason, the idea of taking a 2-month sabbatical is frowned upon, whereas having a 2-month gap just in between, quitting your one job and accepting the offer for the other job has less of a stigma, I found personally. But that's just my opinion. I'd love to hear, what are your thoughts on job hopping? Have you ever job hopped before and purposely taken that new position much later than you could have, just so you'd have more time off, just so you could have that mini retirement experience? Are you guys interested in mini retirements? Let me know in those comment sections down below. One more Reddit post I want to share with you guys is financial incompatibility alone enough to end a relationship? And I'm just going to read the post for you. I'm not even, well, I'll probably share some of my opinions, but I'd really love to get your perspective on it, because it's something I know I've personally struggled with, where if my financial goals and my vision for my future doesn't align with a potential partner's, it becomes very difficult for me to envision a future with that partner. As Brad posted in the Reddit Personal Finance Canada, should an otherwise happy relationship end because they know you'll have financial problems in the future? We're 25 with our 5-year anniversary coming up. We're pretty happy and we rarely fight. However, I'm quite passionate about personal finance and she isn't. I started my TFSA at 18. She's funding the RRSP, but at a much smaller level with a higher salary. Each week she spends roughly what I do in a month. She wants to buy a house. The first one she showed me had 4 bedrooms and was $1 million. I want to rent since we don't know where we'll be living or working in a few years. Plus, we aren't yet married. I've been sacrificing all my life for my future family and so we can retire early and travel. She likes the idea, but she's more interested in a high-end Lamborghini, which she's convinced she's going to buy one day. Is it possible to make something like this still work? That's a great question. I don't have the answer to it, but I would love to get everyone's perspective in that comment section down below. Do you have the same financial goals as your partner? Do you have the same financial philosophies as your partner? And if not, how do you make that work? And if you do, did you guys always have the same perspective? Or is that something that you slowly align together over time, over familiarity? I'd really love to know for personal reasons. So jump into those comment sections down below and share with us, what are your thoughts on this subject matter? Real high level, I think the first thing is, don't jump to conclusions with this. You need to really have a deep discussion, and it's maybe not just going to happen one night. It may be a discussion that happens serially over a month or over months or a year. But I think it's really important to highlight not just the reason or the logic you're using to come to this conclusion that financial independence, retiring early, and being more frugal is the ideal lifestyle or choice for you, but you need to sell the vision, like, why are you doing this? You're doing this so that you can travel around the world, say, or you're doing this so that you can homeschool your children, or you're doing this so you can be a stay-at-home dad, or you're doing this so you can be a stay-at-home mom, or so that you can both be stay-at-home parents. That's the sort of thing where you need to really sell that vision. And I've had business partners in the past who I know didn't necessarily have the exact same financial vision as their spouse or their partner. And at first it was difficult for them to align their goals, say, by acquiring more rental properties. But by my business partner sharing his perspective that, hey, this next student rental property or this next rental property, this could pay for our children's education. This could pay for that cottage on the lake, that vacation property we've been wanting, or this could pay for a yearly vacation for us. And it's not going to actually dramatically impact our finances today. We don't need to increase our cost of living, or, we don't need to have that lifestyle inflation. Again, I think it's really important you don't jump to conclusions, that you really try and discuss this at length multiple times with your partner before you come to the conclusion that the relationship won't work. But again, let me know your thoughts in that comment section down below. Recently, you guys may remember I did a video kind of attacking the engagement ring industry. And it was very interesting. It sparked all kinds of conversation. It sparked all kinds of assumptions. And a lot of people were kind of taken aback thinking that people don't actually spend 10, 20, 25 grand on an engagement ring. They spend that on a wedding. Like you, I would like to believe that that's not the case. And I just want to share with you a really quick post from the Canadian Money Forum, and it was titled, Engagement Ring, 20 to 25K. Hi all, looking to get a diamond engagement ring possibly within 3 to 6 months for my girlfriend. Looking to spend between 20 to 25K. Anyone have good referrals or links on a good source of diamonds? Willing to travel within North America as well to make the purchase if needed. Can pay cash as well, but looking for something similar to Cartier quality. I am in Toronto region currently. So, I just wanted to kind of point out to you guys, people do spend a shit ton of money on engagement rings. I think they're crazy. Let me know your thoughts in that comment section down below. It's really interesting because he posted this in a frugality section on the Canadian Money Forum, so maybe it's just someone trolling. However, you know, he's been a member since January 2018. He's got 61 posts, so if he just decided to start trolling, it seems like a weird time and a weird topic to pick. I think this is legit. As well, if you were about to buy an expensive engagement ring and didn't, I think it'd be really cool if you jumped over the Canadian Money Forum and shared the logic, the reason, and the why or the how you came to that conclusion with him, so that he maybe doesn't waste a shit ton of money on a shiny rock. But again, just my opinion. Finally, the last thing I want to share with you guys today is, last week I discovered the Masters of Scale with Reid Hoffman podcast. It is amazing. You guys need to go and check it out. I highly recommend it. He's just essentially interviewing all these amazing founders and different individuals that were critical at different stages of companies' growth, of their scaling experience. And so he's got people like Mark Zuckerberg, he had the founders of Airbnb, he's got Sarah from Spanx. There's just an amazing collection of entrepreneurs and some of the smartest people living today. So I highly recommend you check it out, get their perspective on business. I've been enjoying the storytelling in it, let alone all the lessons and business lessons I'm able to extract from it. So, what podcasts are you guys currently digging? Share it in the comment section down below. That's it for this episode of the McKeever Show, episode number 2. Did you guys enjoy this video? Did you like this video? Smash that like button if you did. Hit the subscribe button, it's actually down here, if you enjoyed this video as well. Sharing's caring, guys. It's the only way I get new followers, so I'd really love it if you guys would take your favorite episode or your favorite clip, share that timestamp on Facebook, on Reddit, on Twitter, wherever you're social, and share. Sharing would mean a lot to this guy. So thank you guys again for watching this episode. Until next time, remember, making money is a team sport. There's more than enough money in this world for us to all make it, but if you're not saving it, I mean, like, what's the point? Thanks.